Most people take their required minimum distribution, or RMD, from their IRA, and then throughout the year make donations to their favorite charities. But there may be a better way. Listen up. If you are in the required distribution phase of your retirement and donate money to charity, you may want to take advantage of something called a Qualified Charitable Distribution. Making qualified charitable distributions from your IRA lets you maximize your charitable impact while reducing your taxable income. At a certain age, you're going to be forced to distribute a certain amount from your IRA so the IRS can finally tax you on that money. Increasing your taxable income unnecessarily like this causes all kinds of tax challenges. It could push you into a higher tax bracket. It may impact your ability to make certain tax deductions. It could even potentially reduce your Social Security income and increase your Medicare premiums.
Wow!
Yeah. Most people take the RMD each year and write a check to their favorite charities throughout the year. They don't know they could be missing out on a significant tax-saving strategy. Here's how it works. Instead of distributing your RMD to yourself, send the money directly from your IRA to the charity. This will help satisfy the RMD requirement, but will not increase your taxable income. That's key. When you use your RMD to make a QCD, sorry for all the acronyms, when you use your RMD to make a QCD, your taxable income is reduced dollar for dollar. This approach to charitable giving helps you save on taxes while supporting your philanthropic goals. So who does this strategy work for? Consider QCDs if you have charitable intentions and you're in the RMD phase of your retirement life, but you still don't need all of the funds they're forcing you to take out. And you would like to reduce your future RMDs by lowering the balance of your IRA. You've already donated the maximum allowable percentage of your adjusted gross income. You wish to make a larger charitable gift than is possible by donating cash or other assets. You'd like to make a large donation immediately, and you've already identified the qualified charities you wish to support. Okay, so what are the rules you have to follow to make this strategy work? QCDs are subject to specific rules. Number 1, your chosen charity must be 501c3 qualified to receive QCDs before making a donation. Be sure to get an acknowledgement of the gift for your records. Number 2, funds must be transferred directly from the IRA to the charity to avoid tax complications. As the donor, you can receive a check in the charity's name and send it in. However, you cannot receive the funds in your name, then write a separate check to the charity. Number 3, the QCD limit started at $100,000 in 2023 and now gets cost of living increases each year. Check with your advisor on the maximum amount for the current year. Number 4, remember, you cannot take a charitable deduction on your taxes for making a QCD. Number 5, your QCD must be completed in the current tax year and by the same deadline as a normal RMD, usually December 31st. I got a pro tip for you. Make your QCDs early in the year. If you forget and take regular distributions from your IRA for other purposes, you could be disqualified from making a QCD in that year. So do it in January. Pro tip number 2, the tax benefits can be especially powerful if you do not itemize on your taxes. When you make a QCD, you can instruct your IRA custodian to transfer all or part of your RMD up to the QCD limit to one or more qualified 501c3 charities. If you're married and you and your spouse file taxes jointly, the QCD limit doubles. Additional considerations. Not all charities qualify to receive QCDs. Private foundations and donor-advised funds are not eligible to receive QCDs. If you don't know what a DAF is, you should check out our videos on DAFs by clicking in the link in the corner right now. Number 2, let your tax professional know that you did a QCD. While QCDs aren't subject to federal taxes, state tax rules vary. Check with your tax advisor for guidance. This is definitely something they need to know about. Number 3, you can make a QCD that is more or less than your annual RMD. Let's say you have an RMD of $5,000 and you only want to give $3,000. Now, you still have to withdraw the full amount of your RMD and pay taxes on that remaining $2,000 that you didn't give to charity, But you can also use a CD to give more than your RMD for the year. However, you can't carry over that extra distribution to future years. Note, you must take your entire RMD each year to avoid penalties. Number 4, you can make QCDs to multiple charities. You can use your QCD to make as many donations as you want throughout the year. Number 5, making a QCD may help your giving dollars go further, maximizing your philanthropic impact. Donors have the option to direct a one-time QCD to a charitable remainder trust or charitable gift annuity. Check with your advisor on the current year limit that applies to this option. Number 6, if you are working during your RMD phase of life, be careful doing a QCD. The IRS does not want you making tax-deductible IRA contributions and getting the benefit of making a QCD at the same time. The conclusion? QCDs may result in greater tax savings than just claiming a tax deduction for a cash donation. This is because QCDs reduce your adjusted gross income, or AGI. AGI is used to determine your Medicare premiums and the taxable portion of your Social Security benefits, among other key financial calculations that could impact your retirement income and tax obligations. QCDs offer an opportunity to increase your philanthropic impact and contribute to the greater good while potentially reducing taxable income. Heston & Haslam is available to help you evaluate the key considerations of QCDs to see if the strategy is right for you and your family.